Welcome back. 18,280 on the index. So really looking strong with that intraday chart as we're continuing to build onto those gains that we started with at the start of the trading day. The Nifty Bank as well is comfortably in the green. Let's move right on then and run you through a lot of the newsmakers. Kunal Rambe as well is joining in on the charts. Kunal, before I get to you, I'm going to discuss another banking major that came out with its quarterly performance, and that's Union Bank. Interesting because you had the net interest income that soared about 22% on year to come in at about 8,251 crores. The profit was at 2,782 crore rupees. That's 93% on year. Operating profits grew 24%. Advances were up 13% to 8.1 lakh crores. Asset quality is well moderated with GNPAs at about 2.53%. Net interest margins lower though at 2.98%. And you had the deposits as well that came in at about 11.2 lakhs, up about 8% on year. In fact, let's listen in to what the management had to say as we interacted with them on the road ahead for the bank.
Return on assets, we are hoping to, at least 25 is what we have given the trade, that it will be at 1. In the current financial, for the quarter, we were at 0.88, and for the year as a whole, we were at 0.69. We are just hoping that we will reach 0.75 at least at the end of the fiscal. Almost 50% of my loan book is covered by an MCLR, and so this is to be repriced once in a year. So out of that, just about 50% of them have been repriced during the current year, and going forward the remaining 50%, if you look at even in as of September alone, I've got about 41 to 50,000 crores of my loan book to be repriced during the year. So I'm not seeing any reduction in my margin.
Okay, let's move on and talk about the OMCs, ONGC, Oil India. Both these are in focus. Goldman Sachs has actually come out with a note on the Brent crude oil prices, where they believe that Brent will actually rise to $95 per barrel by December and $100 per barrel by April 2024. They expect a large deficit in the second half of the year, and rising emerging market demand is something that will be driving the 3/4 of the swing from Q1 surplus to the second half of the year in terms of a deficit there. They do not think that the US regional banking stress is a big concern, while weak industrial data and falling product are also causing some bit of a concern on that front as well as on a global oil demand front as well. So we're seeing that both these OMCs are in focus today and passing in trade post that as well. That is Oil India and ONGC, both of them in focus.
Okay, let's move right on then, and Kunal, discuss your stock. ICICI Pru Life, very listless over the last 1 month or so. At 442, do you think that there is some sort of a breakout on the charts?
Very good afternoon. So yes, in the beginning of April, we had discussed this counter near to 440 mark. And at that time, there was a first breakout after almost 6 months of downtrend. After that, the counter went up to 460. It retested the breakout zone, and now in today's session, it's up by around 1.5% near to 443. I think this retesting is offering us the final opportunity to accumulate this counter. One can initiate a buy at the present level. The stop loss being 428. I think this counter can show us now 475, 480 very soon.
Let's move on to number 22, and that's SJVN, Ashesha, and this one is not in focus on the back of its numbers but a news flow.
Not in focus on the back of its results. The company informed the exchanges about some order wins, on the back of which the stock is gaining in trade today. The company has bagged 100 megawatts of order, which will be supplied at the price of 3.17 per unit. This has been done under open competitive tariff bidding process by Gujarat Urja Vikas Nigam Limited. Apart from this, they've also bagged 2 other orders, one from Gujarat Vikas Nigam Limited for supply of 200 megawatt, which will be done at a price of 2.88 rupees per unit, and one from Rajasthan Urja Vikas Nigam Limited of another 100 megawatt, which will be supplied at 2.62 rupees per unit. So on the back of 3 order wins that have come in, the stock is gaining in trade today. As we speak, it is gaining over 1%.
Right, let's move right on then, and Harsh, discuss your next stock, Aether Industries.
Absolutely, Avan. So you're looking at results again. Revenue is up a solid 24% year on year. It's at 184 crore versus the 148 crore same time last year. EBITDA margins have expanded 39%. EBITDA has expanded 39%, which means that we've seen a margin expansion. I'm sorry for that. So EBITDA has expanded 39% from the 43 crore mark. It's come in at 60 crore on a year-on-year basis. That's a solid expansion. Margins therefore have risen 350 bips, 3.5% from that 29% mark to 32.5 odd percent. We're therefore seeing profit also expand 44% on a year-on-year basis. Impressive on that particular front, but nonetheless the street not too impressed by that number. The stock is down. Net profit is up 44% to 38 crore versus the 26 crore number same time last year. That's broadly the numbers on Aether.
Okay, let's move on to the next one. And Kunal, Bajaj Finance, how is this one looking? Still a good time to buy?
So yes, I'm reiterating a buy on this counter. Earlier we had discussed about this counter near to 6,200 when it was giving the first breakout, and that's on around 28th of April. Post that 3 days consolidation, and today it's up by around 4.5%. So it's a wonderful buying opportunity for the momentum traders. Those who already initiated a buy, now the stop loss is gonna be 6,400. New initiating position, stop loss being 6,500. I think now this counter can show us 6,900 to 6,950 very soon.
There you have it. That's the view coming in on Bajaj Finance. Let's move right on then and discuss another set of numbers. And CAMS came out with its quarterly performance, and the company this quarter has delivered a net sales of about 249 crores. That's up nearly 2.4% on a year-on-year basis. Profits absolutely flat, 74 crore rupees. The company has put out an EBITDA this quarter as well at about 116 crores, just about a half percent higher compared to what they delivered in the last year. So all in all, a fairly okay set of numbers that they have delivered. That's CAMS for you. The stock as well down 1% at about 2,056.
Okay, let's move on and talk about SBI. And Kunal, how is this one looking like on the chart? Obviously, we had seen a good run-up coming in a while back, but now again, would you still reiterate a buy, or is it some time to just hold on to this now?
So again, this counter made a bottom near to 500 where it made multiple bottoms, and since then this counter is making a clear higher top higher bottom formation. There was a kind of pause sign on the Friday, but today again it's soaring in trade, and I think this trend may continue. So yes, it's someone who wishes to buy new can initiate a buy at the present level. The stop loss will be 575, and I think now the swing high, the previous swing high, which is placed at around 615, can be the immediate target on it. So yes, it's a buy. Keep buying even on declines. 575 being the stop loss, target being 615.
Let's move on and talk about Britannia. Britannia reported its numbers late Friday evening, and surely we saw a good beat coming in terms of the margins of the company. Strong beat there because a strong expansion of around 200-300 basis points in terms of the margins of the company. So yes, overall beat in terms of margins, volume growth at 2 to 3%. We were expecting the volume growth to be at around 4 to 5%, but good number there coming in from the company. Now let's look at what the brokerages did say this morning as well. And in terms of brokerages, they are giving it a thumbs up as well. Like Jefferies is maintaining a buy, hike the target price to 5,300 rupees per share from previously 5,200 rupees per share. They are highlighting in terms of the gross margins, which are at an all-time high as well. Britannia gave a bit of a lower guidance in terms of FY24. That's one factor that they pointed out as well. Management is focusing mainly on the next 100 years, unlike investors who overemphasize on the short-term margins. JP Morgan too maintaining a neutral rating and given a hike in terms of the target price as well, 4,920 rupees per share. Gross margins delivered continued to surprise positively, and that's the main surprise that everyone was looking at in terms of brokerages as well as other analysts on the street as well. So surely positive signs coming in there, but stock as of now is not doing anything exciting. But what the management had to say in terms of their gross margins and volume growth, let's go cross and listen in to what Warren Mary had to say for FY24.
It will hover around the same, maybe, a percent here or a percent there. Won't make a big difference. The point is that we might have to make a few changes to pricing in certain brands in certain packs. So we don't want to become, only margin hungry and not continue our march on revenue growth, volume growth, and market share growth. So it has to be a balanced play, and that's what we are trying to do. And that's how we've looked at getting the golden triangle every year. But I don't worry too much about volume. I'm more worried about the number of packs that we sell. So I would want to see aggressive growth as far as number of packs that we sell. But yes, you're right. Even volume growth will definitely pick up in this year.
All right, there you have it. That's the word coming in from the management of Britannia. All right, let's move right on then and Astral, discuss the charts of this one. And Kunal, understand why you like the stock. Do you think that at the current price as well, it's likely to rise up further given the 4% move that we've seen in the last week or so?
A perfect inverse head and shoulder on the daily chart, the first breakout being 1465 and the follow through breakout near now being 1525. Today the counter has given that breakout. I think now clearly heading for 1600 and beyond that 1625. One can initiate a buy today with the stop loss of 1510. I think the first target can comfortably place at 1600 and above that 1625.
Okay, let's move on and talk about Blue Dart. Ashesha, why is this one in focus today?
Blue Dart is in focus on the back of its results and the stock is declining in trade today. Weak set of numbers have come in. Revenue for the quarter gone by stood at 1216 crores, up marginally by about 4% on a year-on-year basis. But bottom line has seen a drag this quarter. Margins have come in at 16.4% versus 25% margins that the company reported in the fourth quarter of FY22, which means that on a year-on-year basis, margins have contracted by about 900 basis points. Net profit, meanwhile, has come in at 69 crores versus 137 crore net profit that the company reported same time last year. So it has fallen by over 50% in just a matter of 1 year. So on the back of these kind of results that the company has reported, the stock is declining in trade today. 1.5% lower in trade for Blue Dart as we speak.
Okay, there you have it. Blue Dart, that's stock number 29. And at number 30 then, Harsh, let's discuss Star Health and ICICI Lombard.
Well, yes, so, non-life insurance companies, I beg your pardon, have released their numbers for the month of April. And you're seeing a good growth, coming through, especially the premium growth that's come in for April is 20% for non-life insurance sector as a whole. Standalone health insurers have actually grown at 35% in April, and Star Health in particular is in focus because they've seen premiums go up by 25% on a year-on-year basis. So that's a pretty strong number to take out. When I'm looking at Lombard as well, a 16.5% growth on a year-on-year basis, quite reasonable in terms of their growth as well. So largely on the back of that, we have both these insurers in focus today.
Let's move on and talk about Metropolis on the charts, Kunal. This one has not done much for the longest period of time. Finally, some bit of a green that we're seeing coming in for Metropolis. Is it the right time to buy this one, or maybe again we could see a bit of a consolidation there?
See, actually on the chart, we saw massive consolidation right from December 2022 so far. That's been almost 6 months now. And today, the counter, actually, I was about to share this idea near to 1310 mark, which was the first breakout. And what we can see is that counter actually went up to almost 1360s. Right now, it's trading at 1330. So it's showing the sign of coming out of that massive consolidation. One can keep an eye on it, initiate a buy even on decline. The stop loss on this counter can be 1250. Yes, it's little far away because it's coming out of consolidation. So 1250 can be a good stop loss. If this momentum picks up, I think the first target can be 1500 followed by 1750. These are the positional targets one can definitely accumulate for long term now.
All right, watch out for some of those levels being tracked on Metropolis. Ashesha, let's move right on and discuss Ajanta Pharma in greater detail.
This one is in focus on the back of its numbers that it reported on Friday post market hours. It has recovered from the lowest point of the day, but despite that, it is holding on with a cut of over 1.5%. Revenues for the quarter gone by have risen by about 1% on a year-on-year basis. Margins have contracted this quarter. Margins came in at 16.9% for the fourth quarter of FY23 versus 24% that the company reported same time last year. Profit after tax has also come down a whole lot. In fact, it came in at 122 crores versus 151 crores that the company reported same time last year. So on a year-on-year basis, profit after tax has come in at has declined by about 19%. Research and development expenses, meanwhile, have risen. They've come in at 7% as a percentage of total revenue. 63 crores is where R&D expenses stand for the quarter versus 59 crores that the company reported same time last year. So weak set of numbers is what the stock is reacting to. Margins have contracted this quarter. Profit after tax has come down by about 19%, and the stock is declining over 1.5% as we speak.
Okay, let's move on and talk about then Maruti Suzuki on the charts. How is this one looking like, Kunal? What should we be expecting in terms of numbers from here?
So yes, again a sideways consolidation, and inverse heading showed a breakout, and that breakout came actually on Friday itself. The breakout level was 8,850. And what we can see is that it's up by around 1.5% even in today's session. Today was a gap up open. So yes, it's a fantastic buying opportunity. One can accumulate right now. One can buy even on the decline till 9,000. The stop loss of this whole idea is going to be 8,950, and one can expect the target of 9,300 to 9,350 in short period of time.
All right, there you have it. Those are some of the short-term targets, 9,088. That's where Maruti is currently at. Moving right on then, we've got lots more newsmakers, and Harsh, why is Sundaram Clayton in the spotlight?
On the back of results, Avan, so we're seeing revenue which is up 22.5% on a year-on-year basis. It's coming at 8,460 crore. We're also seeing expansion in EBITDA, but slightly slower. So 20% growth on the EBITDA front. It's coming at 1,088 crore versus the 904 crore mark same time last year. We're seeing margins contract a wee bit. Revenues expanded, EBITDA not as much. So margins have come down by around 24 bips or so. It's down to 12.9%. And we're seeing profit after tax grow 5.5%. Largely in-line set of numbers, and you can see the stock is just fluctuating between the red and the green. In fact, marginally in the red as we speak.
Okay, let's move on, and on the charts we have SAIL, Kunal. What are the charts looking like for this one? What is the target price that you're keeping, and is it a buy call still?
So yes, last week we had discussed about this counter near to 81.5 kind of level, because there was the extreme support level. We saw a decisive rally till 86, retraced near to 83, and now again in momentum today. It's up by around 2%. So yes, this confirms a higher bottom for the counter. One can trail the stop loss if the position is already open to 82.5. If fresh entry, then the stop loss will be 82. I think now this counter can show us 88.5 to 89 mark very short term. Once the price reaches that level, we'll keep reiterating a buy on this with the new targets on this.
About an earnings candidate, we just saw the earnings come out for Craftsman Automation, and a strong performance is coming from the company. When you look at the charts, so we have seen an uptick coming in the stock. In terms of the revenue growth for the company, that has seen almost a 50% growth in terms of revenue on a year-on-year basis, and revenue stood at 980 crores versus just 657 crores last year. Profits of the company also good growth over there as well. 78 crores is what the net profit is at versus 51 crores last year, which is a 51% uptick in terms of the numbers. We saw a spike, then a fall, and now the stock is trading almost flattish. We'll watch out for those margin numbers. That could be seeing some pressure there as well, Avan. But as of now, the stock, after seeing a spike, has given up those gains and down again 2%.
Okay, let's move right on then. MRF, and everyone is eagerly waiting for that 1 lakh mark. Is it going to touch 6 digits? Well, it's very close to that. And interestingly, the company came out with its quarterly numbers just a short while ago. It was very impressive in terms of the performance. The net profit doubled in the March quarter. EBITDA margins expanded over 400 basis points. Lower raw material costs, operating leverages, all of that really helped it. And you've got crude oil prices which are on the fall. That also is a raw material which clearly aided this. And the stock declared its highest ever dividend of 169 rupees as well. That was given a big thumbs up. So although the stock has not really hit that level of 1 lakh, we are still watching out for those levels. The high has been 99,900 and 933 thereabouts. It's cooled off quite significantly from those levels. Impressive set of numbers. A lot of tire stocks have been in a sweet spot, and that's why it's in the spotlight.
Okay, let's move on. And one more earnings candidate that we have is that is Apar Industries, and this one is on the back of a strong set of numbers. Stock is up almost 5 to 6% in trade as of now. When you look at it, came out a short while ago in terms of the net profits of the company. What a growth that you're seeing there. 243 crores is what the net profit is at versus just 82 crores last year. Revenue also of the company is at 4,100 crores versus just 3,000 crores last year. Strong growth on that front as well. Margins also seeing an expansion. Margins at 10.34% versus 5.79%. So also the company has declared a dividend of 40 rupees per share as well. So surely going to be interesting to watch out for, because as of now the stock has, like you can see on the screens as well, the stock saw a sharp spike up as well, and 5.78% gains is what Apar Industries is trading with.
Okay, there you have it, 38 stocks, and that brings us to the end of Market Fatafat. So thank you so much, Kunal, for joining in, as well as to Harsh and Shesha for being with us on Market Fatafat. But as we wrap it up, ahead of the Karnataka Assembly elections, we're seeing rallies that are being held in Karnataka with a lot of big heavyweights doing roadshows in the state. The Chief Minister, Basvaraj Bommai, held a public meeting as well in Hanumaratha. Let's take a look.